Hi guys, welcome back to another one of my videos. Today is part of our technical analysis series. I'll be looking at Bollinger Bands. These are by far one of my favorite indicators to use because the way I trade, they work well with the way I work. The first thing you want to do is open up your instrument, whether that's a commodity or a stock, and you go to indicators. It is one of the most popular ones, so you'll find it in the most popular area, or you can just search for it. You click on Bollinger Bands. Now, Bollinger Bands, they generally work for a shorter time period. So I would say under a day if you're a day trader. So you want to look at the 1 hour time period, the 4 hour, the 2 hour. It can even work for a 15-minute time period. Personally, for me, I generally use a 1 hour or a 4 hour time period. Depends on what commodity I'm looking for. Now, this is the most important bit, the deviation percentage. You don't need to be a mathematician to be trading. Okay, so you don't really need to understand how to get standard deviation. It is good, but as I said, this is a beginner's guide. I may do it in a later video how to work out the standard deviation, because again, sometimes it is helpful to understand where the numbers have arrived from. Okay, you choose your open, close, high, low. Again, that's all relative. I just keep it as close. The upper line, the middle line, and the lower line. What I'm going to do, I'll just make it a little bit thicker so you guys can see. I keep the colors the same. So the upper line is purple, the lower line is light blue, and the middle line is yellow. All right, confirm. Now it plots all my data, okay? Now what does the Bollinger Band tell you? It actually tells you, for me, the way I use it, it tells me my buy and sell points. So for example, this yellow line represents the average price over a 20 period, okay? So it could be hour, again, it could be 4 hour, whatever time period you're using. I'm just gonna change this to a 1 hour time period. Now, that's the average. The price movement is based on standard deviation. So we've set our price deviation to 2. So there's 2 standard deviations away from the average price. So you can see the price has moved a lot from what the average was. That is a good indicator to tell you when to sell. If it's moved 2 standard deviations below your average price, that's a good indication that you should buy. Okay, and we'll look at a couple examples. That's the most recent price point, and the reason why you see minus 173, because I've got someone, I believe the price will go up. This is for coffee, and so I bought quite a few. All right, so if we go back in our time scale, now you see here, it wasn't very volatile, the price was static, and then it made a big jump up. So it's gone well far above our upper line on our Bollinger Band. So that would be a good indication that you should sell, because the price has moved far above what the average is. Okay, you can see the price does in fact drop down below the band. Okay, here's another example of a buy point. Okay, where you should buy. Now, personally for me, I wouldn't buy it if it's just on the line or a little bit below or a little bit above. Okay, I'd make sure I've seen a very good movement from the average price line. So it's gone far below your buy line, or it's gone far above your sell line. So for me, this is a very good example. You can see how the price from the average is moved far beyond what the average was, and it's gone here. So that would be a good indication that you should buy. Okay, and as you can see what happens afterwards, and remember this is a 1 hour time frame, so after a good few hours the price has gone up. Again, right here, it's not moved far above, but it can give you a good indication to sell. Okay, so this was the point that you should sell at. And again, you can do short selling, where you can bet against the market. And that's a good indicator that the price will move down because it's gone so far above the average. Okay, and in fact, the price does move down. It gets close to whatever the average price should have been. I'll show you a couple more examples. Again, we can see a quick one here. It's gone above the Bollinger Band, so that's where you should be short selling. Okay, and the price does go down and it in fact drops below the average. So that would give you very good profits. Okay, here's another one. You can see that's the average. This is the lower line of the Bollinger Band, and the price has gone far beyond the lower line of the Bollinger Band. So this will be a very, very good point to buy at. And then you can see what happens to the price. It's gone from 105 pretty much all to 108. So it's a movement of $3. Okay, so you'd have made very good profits on that trade. Again, this is one of my favorite ones to use. I do use it with a couple of other indicators, and you can watch my previous videos to see what they are. Again, another good example. So it's gone above your Bollinger Band, not massively far above, but it's gone above. So that is a good indication to short sell. Okay, so you're betting against the market, you're betting for the price to drop, and the price does in fact drop. Okay. Again, here's another one on the Bollinger Band. It's gone below your lower line, so that'll be a good indication to buy. And remember, this is a 1 hour time frame. So after 1, 2, 3, 4, 5, 6, 7, 8 hours, the price has shot up from around 104, 105 to around 108. So again, that would have been a very good trade. Now, this is one of my favorite indicators to use. The reason why it's made me a lot of money. But I don't use it as a standalone indicator. I use a few others. Watch my previous videos to see what they are. Hope you enjoy. Please like and subscribe, and I hope to see you again in the next video.